What's up guys, welcome back to the channel. In today's video, I'm going to be going over what a swing and a scalp trade is, the main differences between the both, and the pros and cons to each. So let's jump right into it. So scalps are all about quick profit. You're compounding small gains and you're entering a lot of trades throughout the day. In swing trades, you're being a lot more methodical and patient with your approach. You're entering a trade and you're allowing it to play out for a couple hours to a couple of days to a couple weeks and months. For today's example, I'm going to pull up the XRP chart. I really like the consolidation that happened over here, and I think it's a really good example to explain for this video here. Scalpers tend to enter intraday trades, so you can play this just like you would on the lower time frame. Today's video, we're going on the higher time frame. So what I'm going to do is I'm going to just jot down a range of consolidation that XRP was trading in. You're going to think lows to highs, highs to lows. When you're entering long positions as a scalper, you're thinking in and out as well. So if we're trading in the middle of a range, you're gonna want to take a lot less trades than you would if we were trading towards the low end, especially if you're thinking longs. And what a scalper's thinking is, I'm gonna enter as close to the lows as I can, and I'm gonna start securing towards either the middle or the high end of the range. Low, middle, high. Low, middle, low, middle, low, middle, high. Scalping intraday, you're gonna get a lot more opportunity in the middle than you would as a swing trader, as you can see in this price action here. There's a lot more movements that happen intraday than they do on the macro. As a swing trader, where a scalper is looking to enter in at the low end, start securing off the middle and the highs, a swing trader is letting their position play out. Whether they're letting a position build at the lows or whether they're entering at the lows and just allowing price to move up, come back down, move up, come back down. Essentially, you're letting a trade play out until the consolidation ends and the price moves up, thus yielding you bigger gains. So what are the pros and cons to both? Let's start off with scalping. The pros to scalping, you get a lot of quick profits throughout the day because you're constantly entering and exiting positions. You have a higher frequency of trades because you have more opportunity to enter trades throughout the day. And you have less exposure to the market because you're entering and exiting these trades. You don't subject yourself to the downside if there should be. The cons, however, it requires an intense focus. It's extremely mentally draining staying glued to the chart, looking when to enter and exit a trade consistently throughout the day. There's a higher transaction cost because you're constantly entering and exiting these trades. You're constantly paying fees to the exchange and you're making smaller profits. Even though the pro is quick profits, you're still making smaller profits because you're not risking as much. Remember, scalping is an extremely high risk way to trade. You have to know exactly what you're doing before you're even entering these scalps. In swing trades, the pros, you're aiming for bigger profits. Because you're letting plays play out on a larger time frame, you're allowing larger moves to happen, thus yielding larger gains. These trades are also less stressful. Whereas a scalp trader is continuously monitoring the market to enter and exit trades, a swing trader is allowing these trades to play out. There's less market noise. Because you already know where you're entering a swing trade and you're not looking to exit so quickly, you're just allowing the trade to do what it does. Hence, avoiding the noise and focusing on broader trends. The cons, however, for a swing trader is more market exposure. Because you're holding a trade a lot longer, you subject yourself to a lot of market volatility. Swing trading requires a lot of patience. I don't care who you are. In order to get these trades to their target points, you gotta let these trades do what they do. There's a potential for larger losses. If the market moves against you and you're playing a bigger position size on these swings, you subject yourself to a larger loss on your position. And lastly, there's a longer time commitment. You'll need to monitor these trades for days, maybe even weeks, which requires ongoing attention. So there you have it. Scalping is fast paced and lower risk per trade, but demands focus and can rack up fees. Swing trading offers bigger moves with less screen times, but comes with overnight risks. Let me know in the comments down below which one you prefer. And if you like more trading content just like this one, hit the subscribe button down below. I'll see you guys in the next one. Peace.